Good morning, ladies and gentlemen. How's everybody doing here today or this morning? Hopefully everybody's having a good morning. So what's going on? Hey, what's going on, guys? I know it's been a couple days since I've really been on here. Been getting things situated in my new house. Let me get this mic over here. Maybe you'll hear me a little better. So yeah, I've been getting things set up in the new house, new trading station up. So I've been pretty busy recently. So good morning, Shaz. Good morning, guys. What's good? Laura, hey, Anthony, Sam, Dustin, Jose, Yuri, always here, my man. I appreciate that support. Yuri, you're always on here with us. I really appreciate that, my man. Nestor, good morning, guys. So I know I haven't been on for a few days. We're here now. We should be back to a normal regular schedule. But as you guys can see, the markets are going down again, as we've been stating. So hopefully some of you guys have been able to take advantage of this current market and situation as I have. It's been beautiful. And we'll just see if this downward momentum continues, right? Yo. Thank you, Mario. I appreciate that. Yeah, it's a lot of work here at the new house, but it's fun. Good stuff. By the way, does it seem that the stream is coming through better than normal, or can you see me better than normal? You like the lighting in here? It seems like the stream is actually doing a little bit better here than at the other place, old office. It actually seems like it's coming through far better than I would normally do. Yeah, definitely. So pretty happy about that. Pretty happy. Yeah, I got the router like right here. The router is literally sitting on top of my computer. I was like, I'm getting as best as I can get. I'm putting the router on my computer, so it's sitting on top of my computer right now. So my internet's become mucho gusto. I don't even know if that's what I'm supposed to say there, but anyways. All right, so let's get into sharing the screen here. We are going to be doing a day of, I don't have the camera on the screen, but it doesn't matter. We'll do that at some other point. All right, so let's first take a little look here at the stock market. So we're going to take a look at the Spider ETF here. So you guys can see, I don't have to, it's pretty obvious what's going on right now, okay? It's going down. For those of you that have been following me and following Boiler Room Trading, for months or even the last year, however long it's been, you know that we have been preaching this for a while. We said it was going to come. It is here. All right. So there's nothing about the market that says bounce, right? There's really nothing that says we're going up at this point. There's only one little thing that I could say has the appearance of wanting it to go up, and I'll show it to you. So this is really it. So you see back here where I'm on the screen, where my mouse is at, I'm hovering over here. Right now, this is back in the year of 2016 in March of 2016. We had this pullback from like 240 to 231.64, right? So this is like a pretty good recognizable pullback here that had this little dip. So I think right now long bias traders are trying to get the market to hold this dip from 2016. Right? If we look at the intraday chart, you'll see that there's that support level right here, and you see where we bounced pre-market. We bounced at 232 pre-market or after hours trading into pre-market. So we did have this little bounce just above that support level from like 3 years ago or 2 years ago. So that's what I see might be the reason for the market kind of having this green push in the morning here, okay? But when you look back at the chart, we'll do a yearly chart now. There's nothing on this yearly chart that says we're going up. The only thing about the yearly chart here is that it's really overextended to the downside. You can see where the 9 moving averages, the blue line, and the price action, you can see we're very distant from price action to moving averages. So this move is overextended to the downside without a doubt, which means that it is susceptible to having a strong bounce to the upside. Whether or not you get the bounce is a completely different story. You don't have to get a bounce, but what it means is the more we see these prices fall and the further the prices get from its 9 moving average, the more susceptible we are to having a strong bounce or a big push back up to the upside. Again, the more aggressive a move is, the more aggressive the counter move is, right? So, the farther we go down, the more aggressive the bounce is back up, right? The slower the move down is, the less aggressive the bounce up would be. So we know the market's going down pretty heavy, right? It's trying to bounce around, do like this whole little jingle jazzle thing. I don't really know what's going on here this morning pre-market. Doesn't really matter. But when you look back here, let's do we'll do a 5-year chart. When you look at a 5-year chart, everything on the chart says that the market is not a buy until it gets down to the prices of 211 to 180, which means in the near term future, whether that's 3 weeks or 5 months or 6 months, that's still pretty near term. We're most likely going to see our stock market down into prices, at least on the Spider ETF or whatever you want to call it, at least the S&P 500, we're going to see down to prices of about 2,000 to 1,800, and then possibly if we go through an epic crash, which isn't surprising, I wouldn't be surprised if we do. If we go through something epic, we'll probably see the S&P 500 down to 150 or 1,500. That would be a really big correction. But then again, some do believe we are into what's called a super cycle, which means if we are to crash, this should be the worst stock market crash we've seen since the Great Depression, if not worse. So do believe or do know that there is theories, conspiracies, whatever you want to call them, it doesn't really matter. But the info is out there that many believe we are on what's called like 100-year cycle, and we are on the last wave or last bull run wave, which means we should be heading towards an extremely bad bear market to market crash, which nobody has seen since the Great Depression. Now, I know some of you are going to go, Connor, that's crazy. It can't be. But honestly, yes, it can be. We've gone to the moon. We've put little gadgets on Mars, okay? It is very possible that we have a Great Depression, okay? If we can build a rocket ship that goes out of our atmosphere and onto the moon, then absolutely we could have a stock market Great Depression crash. It is not far-fetched. All it takes is a bunch of people to go, holy shit, I'm losing all of my money, and all they have to do is sell. That is much easier than building a rocket that goes to outer space, okay? So just know that that is not a far-fetched statement, and it's very possible because all you need to have happen is for humans to make mistakes, which we've already made, which was quantitative easing, right? And then all you really need us to do is start panicking, which it really isn't hard to get someone to panic, okay? Just put a spider or a snake in front of their feet and watch them panic like that, okay? Not hard, okay? So there's a lot of theories that we're on a 100-year cycle where we could have a super big crash, right? And then we could just have a regular bear market. But at the end of the day, it doesn't really matter if it's this or if it's that. What we need to know is in the short term what's happening, and that's what we're going down, okay? So the only thing I see here in terms of structured support is going to put us at about 211, 2,100 to 1,800, $180. It depends on what you're looking at. If you're looking at the big index, then it's in terms of 1,800. If you're looking at the ETF that I have on the screen here, which is the Spider ETF SPY, then you're going to be talking in terms of like 200 to 180, okay? So the only structured support we see here is down at about $180 to $200. So in technical terms, the market isn't a buy, and we actually have much further to go before it's a buy in technical terms, okay? I'm going to take a second here and kind of look through some of these questions here. Good morning, guys, to anybody I missed on the good morning. Thanks for the congratulations on the new house. Yeah, no. Anybody that says buy the dip right now, slap them in the face. They have no clue what they're talking about. If that's your mom, I'm sorry. If that's your dad, I'm sorry. It is what it is. You still got to give them a good little slap to the face, all right? It's not a good idea to buy these dip. Hold on one second. Trend line not broken yet. So to answer, like for John, or was that John who said it? Yeah, it was John. So John says the trend line is not broken yet. So yeah, John is most likely correct. There's a trend line that has not been broken, but there's been a lot of trend lines that have been, right? So if you look at the trend from the '08 drop following up, we're still on track and haven't even touched that, right? It depends on how you want to do. If you want to go by the body candles, then we've broken it. If you want to go by the wicks, then we have not broken the 2008 bull market trend or the 10-year trend. We haven't really broke. If you go in terms of the past 3 years, right? If you were to do a 3-year trend, we broke the 3-year trend a while back, okay? So we have broken many trends. We have broken major support. We really don't have anything until we get down to, as John said, the 10-year bull run trend line, which, you know, I mean, it doesn't, I can't really give you a price that the trend line's at, because if we bounce, regardless. So John's correct. We still got the 10-year bull run trend line that we would need to surpass to the downside. We still have the $180 to $200 structural support system down there. Yeah, so here's the thing, guys. Here's the thing. 1 second. Roku is up today. Okay, excuse me. Sorry about that. I was reading through some comments. So, this is also what we're probably going to see. 1 second. Okay, if this was anything, now again, this is comparing it to, so if what's going on right now in the market is anything in regards to a normal crash or, you know, a normal, you know, bear market, recession, you know, whatever you really want to call it, whatever it is, right? Naturally, we have this big downward move, right? And then it will be followed by an extremely big bounce, okay? And then after the big bounce concludes, that's usually when shit's going downhill bad, okay? So when we have this downward move, we'll most likely see a strong bounce, and then once that bounce happens, that's where you want to get short. Again, if you're not already short, don't short now, okay? You want to wait for the bounce, and then when the bounce happens and it creates that lower high pullback, that's where you short it, because usually the really big move comes after the bounce, okay? What I mean by that is, what did Bitcoin do? For anybody here in the chat right now, please tell me, what did Bitcoin do? Tell me, from its highs at 20,000, what did it do after its high of 20,000? What did it do? And I'm going to wait for the answer while I sit here and drink my coffee. Exactly. So it crashed, right? Yes. There's a gentleman, Hodge. Hodge said dead cat bounce. Russell said it bounced. So yeah, there's a few. They're all somewhat right, but what I was really looking for, and if you didn't say it, doesn't mean you're wrong. But what I was looking for is Bitcoin hit 20,000, and then it crashed. I don't even know. I think it dumped from like 20 to like 10 or 15, or I don't really remember the exacts, but it went from 20. And then it crashed, right? And then what happened? And then it literally went from like 20 to 10,000, and then it bounced from like 10 all the way. And I might be off, but regardless, what I'm explaining matters. And then it bounced. It crashed, and then it bounced almost all the way back to 20,000. It almost went all the way back to 20,000, and then it fully crashed, right? So the first move was your first wave of, oh shit. And then the bounce is really where it's like, okay, we're not reaching new highs. This thing's going to come down. You reshort that bounce. And that's what's probably going to happen here with the market. We haven't had our bounce. So we could keep dropping lower, and we could keep going lower, right? And if it does, that's fine, whatever. But it will bounce. Okay, even if it feels like it's not coming, right? Even if the market goes down for another week, you're going to go, I knew I should have shorted. I just should have shorted it when it was down that much. But no, you shouldn't have. Because if you're not already short, you're already too late. Okay, but you could still short intraday. That's what I mean. Like just because you're not short doesn't mean it's too late. Yeah, you can still short intraday and you can make these moves getting short, right? But like, dude, if you look at from the highs to where we're at now, you missed the move, right? You're long gone on the move. I've been short the whole time, right? I've been short since like back when we were at 280 in the market, right? And I've been holding this whole way. So if you're not short, you're kind of late, but you want to get that bounce, right? So if you're feeling the FOMO where you're like, man, I should have shorted, it's going down, I want to short, I want to make the money with all the bears, just wait. It's not the time. You miss that move. I would wait for a bounce because we will bounce. And when we do, everyone's going to go, is this the dip buying opportunity? They're going to squeeze the stock market up, and then everyone's going to go, no. And then all the bears, this is what's going to happen, right? So this is the way it works, right? We have this downward move. If you caught it, great. If right now you're getting FOMO, stay out, because what's going to happen if you get FOMO, you're going to get in and then it will probably bounce and then you'll go red, right? And then when it starts bouncing, a bunch of people are going to go, oh, this is the dip. This is the dip. We're going to buy it up and the stock market's going to go in an absolute rip. And then it does. It bounces up very aggressively because we had such an aggressive move down, we'll most likely get a very aggressive move up, and that aggressive move up is going to trick people into thinking that this is the market recovering when really it's not, because we had such an aggressive move down that this move back up, it's really just a dead cat bounce where we're having some dip buyers come in because we're so overextended to the downside. It's going up because we're short squeezing some of the short sellers. And then once it's all said and done and that momentum on that bounce runs out, we're going to go straight down. So that's what you want to get. If you're not short now, it's not too late. You still have time, but you got to be patient and you cannot chase this market down or else you'll just get crushed. You could make money and you could come out on top. You know, I mean, dude, I could drink a whole fifth of Crown Royal right now, put my hand on a desk, grab a knife and start, pushing the knife in between the spaces of my fingers. Sure, I could probably do it, but at some point, if I keep doing that, I'll probably stab my finger, right? So you could probably make money shorting this market. It could probably still go down. But if you want to take the risk, be my guest. I'm not going to drink a fifth of Crown. I'm not going to drink a whole bottle of whiskey and then start playing with a knife in between my fingers. I'm not going to do that, right? I'll just wait, right? I'll just wait. I'll let somebody else stab their finger, right? And then I'll wait until everyone's all chilled out and it's time to get ready to go, okay? So again, I think right now best thing to do is wait for a bounce if you want to get short, okay? Wait for the bounce if you want to get short. It's just not the time, guys. So I know we didn't cover a whole lot in terms of stocks today. I didn't really have much for you in terms of stocks, but I haven't been on in a few days. I really want to get on, at least run some of you guys through where my mind's at. Today I do have some time. I'm going to be in Miami. I leave for Miami in like 2 days. So I just basically screwed myself with a really busy schedule this whole past month. Moving into a new place, you have Christmas, the stock market's crashing. My whole life is going in a spiral because I'm so busy. So I just happen to just accumulate a bunch of work all at one time. So it's been kind of hectic. So I do go to Miami in 2 days, but later today, I think I'm going to have another video out, a more detailed video on why we're doing what we're doing in the market, because everybody's coming out with these videos and like, oh, the market's crashing, and I'm like the only one who hasn't. It's funny because I've been calling this market crash for like the past year and 6 months, like very aggressive, while everyone's like, oh, the market's going to go up and we're going to keep continuing, earnings are good, blah blah, bullshit this, bullshit that. I'm like, no, we're going down, right? And I've been calling this. I even made videos predicting it to a T. I literally made a video predicting this 100% dead accurate, right? Though that's still not on CNBC and it's still not aired live through mainstream media. I don't know why, but I made a video predicting this perfectly. And now I'm the only one on YouTube that doesn't have a video going, oh, the market's crashing, which is ironic because I predicted it. And now that it's happening, I'm the only one that's not like, oh, hey guys, look at the market's going down. It's crashing. This is what you need to look out for. Like that's, and so I feel kind of odd because I haven't made that video yet. So I think I really should. So later today, I think I'm going to go out, do a very detailed video on what the hell's going on so that way you can learn what's really going on, because the things I will show you are so much more advanced than what everybody else is going to tell you. And that's where the boiler room steps up their game. All right. So Anyways, I will end it there. The best advice I can give you for today is follow the SPY. Don't only follow the SPY, guys. Follow the Dow Jones, the NASDAQ, the Russell, okay? Make sure you got your eyes on the broad market today. Follow volatility ETFs, so TVIX, UVXY, VXX. Your large cap stocks are going to be the stocks mostly affected by this market. So make sure you're watching your large cap stocks, okay? What do I think of Amazon? I've had a price target of $1,000 really my price target for Amazon was anywhere from $700 to $1,000 on Amazon. So for me, what do I think? I think Amazon near-term future is at $1,000 to $700. When you short Amazon and you make a bunch of money, and I'm correct, make sure to fly out to Michigan and we'll have dinner together, and the dinner is on you. And I like good wine. I don't like any of that $10 Boone's Farm. I like good wine and I like good steak. All right, sounds good. Secondly, all right, just be patient today. Don't rush it, okay? The market will do what it wants with or without you, okay? You want to be with, so just give it time. When you have successfully determined what you believe is going to happen, that's when you take the trade. Avoid the noise. When you have on CNBC and you have some idiot on there saying buy the dip, don't buy the dip, okay? When you have some idiot on there saying that, Donald Trump is going to save the stock market because of reasons or whatever, don't listen to him, okay? Avoid the noise. Take what you know what you know. You've learned it. You've studied it. You've been on the stream. You take my information. You take everybody else's information. You create a thesis, create your own game plan. Stick to your game plan. If you're wrong, welcome to the party, brother. We're all wrong all the time. Just don't be stubborn. When you're wrong, know you're wrong and own that you're wrong, and don't be a jagaloon and let your trade go against you. And next thing you know, you're down a couple $1,000s and you've taken away all the gains you've made for the past 3 months. It's super demoralizing. It's a little bit embarrassing. It's extremely frustrating. It's going to absolutely kill some of your drive. It's gonna mess with your emotions. Next thing you know, you'll make some stupid mistakes. So don't do that. This is about the long run. Don't have your mind so focused on the quick dollar gain. Think about the growth, okay? At the end of the day, we all do this for income, but really at the end of the day, it's to grow. There's no better feeling than looking at your account and knowing that you're successfully growing it, right? Okay, it's great to have a $20,000 day. I love having them, don't get me wrong, but you know what feels worse than a $20,000 day? A losing $20,000 in a day, which, by the way, here's my hand. I've done that. I've actually lost I lost 30 grand in like 3 days from one position. That was like the biggest I ever lost. So I've had my days where I do a third. Hell, I've had days where I make like 40 grand, right? I've had those days and they feel so good. But that 40 grand day still does not feel better than a $10,000 losing day. No matter the green, the red is always worse. Okay. So be calm, be patient. This market is nothing to be early on. This market is nothing to be late on. It is something that you got to be patient with. All right. Anyways, I'm gonna get off. I got to get back to our private group now. So anybody, take care. Have a green day. I'm gonna try and be a green day. Again, I've been trading a lot less these days because I'm very heavily short the market. So I've really been managing a lot of my positions rather than actually taking new positions. So if you don't see a live trading video come, just know that it might be the fact that I didn't actually trade for the day, really take anything new. If I did trade and it was so small that it's basically irrelevant, then I really just won't upload it. So again, just because I'm not uploading videos of the live trading days doesn't mean that I didn't trade. And if I don't load one, it doesn't mean that I trade. I don't know what I'm trying to say here. Just know that I'll be online, and when you see it, you see it. I'll see you guys soon. Anyways, take care. Have a green day. Got to get back. I'll see you guys all tomorrow morning, if not for another video later today, which will most likely come. So stay tuned. I'll see you guys soon. All right. Love you. Bye.